All right, let's dive right in. We're going to unpack a really fascinating argument from our source material. It's this idea that there are five huge structural forces that are quietly, behind the scenes, reshaping our entire global economy. And in doing that, they're basically changing what money even means. So check this out. The source kicks things off with this quote that really makes you think. Everybody's on the edge of their seat, just waiting for the next big crash. But that's not what's coming. The argument here is that while we're all looking for this one big dramatic event, the real change, well, it's a lot quieter. It's happening right under our noses. And what's so interesting about this is, you look at the market right now and all the indicators are basically screaming extreme fear. But this whole thesis, it's not about the day-to-day panic or those short-term jitters. No, it's about something much, much deeper. It's about these massive foundational shifts and how the whole global machine actually works. So that really begs the question, right? What are these structural forces? What are these five big changes that are supposedly rewriting the entire rulebook for the global economy? Well, let's get into it. We're going to break them down one by one. Okay, first up, force number one, a fragmenting world. Think about it. For decades, the global economy ran on one simple rule. Globalization is good. More connection, more trade, that's always better. But according to this analysis, that whole trend, it's not just slowing down, it's slamming into reverse. And you can really see that shift right here. We're moving from this old world that was just obsessed with efficiency, making things as cheap as possible no matter where, to a totally new reality. Now it's all about control. It's about national security. The source puts it really bluntly. Trade policy isn't about economics anymore. Trade policy is national security policy, period. And look, this isn't some abstract theory, right? We all just lived through it. As the analyst Lynn Alden points out, the pandemic was this brutal, real-world stress test. It completely exposed how fragile those just-in-time supply chains really were. And suddenly, every country on Earth was thinking, maybe we should start making our own stuff again. Okay, so if the world is full of these new economic roadblocks and political walls, how do you get around them? Well, the source argues that what we need is a neutral settlement layer. That's a fancy way of saying we need a way to send value that isn't controlled by any one country. And the analogy they use for this is just perfect. Think of something like Bitcoin as Waze for money. It just finds the fastest, most efficient route around all the political traffic jams. All right, on to the next two forces. And these two are really connected. We're talking about inflation and AI. So let's talk about force number two, sticky inflation. You probably don't hear about inflation on the news every single night like you used to, right? But that's exactly why it's so dangerous. The source calls it sticky. It's like central banks are caught in this impossible trap. If they raise rates too much, they'll crush the economy. But if they lower them, prices just go crazy again. So what happens? Inflation just lingers. It's like a slow, constant leak, just draining the purchasing power right out of your savings. And the source has this awesome analogy for how Bitcoin fits into all this. It's a reference to Stranger Things, believe it or not. It's like fighting the villain from inside its own mind. The idea is that Bitcoin operates within our inflationary system, but it's not of it. Because its supply is totally fixed, the very thing that makes dollars weaker, printing more of them, actually becomes a source of strength for Bitcoin's value in comparison. It's using the system's own power against. Now, force number three, the AI infrastructure boom. This one is huge. It's so easy to think of AI as just, software, magic code floating in the cloud. But the source makes a really critical point here. AI is a massive, physical, real-world project. It requires an absolutely mind-boggling amount of energy and a staggering number of data centers. And this is where things get wild. The source lays out this fascinating three-step process. So step one, Bitcoin miners, for years, have been pioneering the hunt for cheap, stranded energy, power that nobody else wanted. Step two, to use that power, they had to build out the data center infrastructure right there on site. And now, step three, along come the AI companies who are desperate for massive amounts of power and the infrastructure to handle it. And guess what? The Bitcoin miners have already built it for them. They basically laid the groundwork. Okay, let's get to our last two forces. Number 4 is all about government stimulus, and number 5 is about how the global economy is splintering apart. So, to really get this fourth force, we've got to do a quick Econ 101 refresher. What's the actual difference between fiscal policy and monetary policy? They sound similar, but they're totally different beasts. So here it is, plain and simple. Monetary policy, that's the Fed, or the central bank. Their tools are interest rates and the money supply. Fiscal policy, that's the government. Their tools are spending and taxes. And the big point the source is making is that for a long time, the central banks were in charge. But now fiscal policy, government spending is in the driver's seat. And that means huge permanent deficits that have to be funded somehow. And this quote from Preston Pysh just hits the nail on the head. Governments don't default anymore, they debase. What does that mean? It means instead of admitting they can't pay their debts, they just print more money to cover the bills. And every time they do that, every single dollar you have gets a tiny bit weaker. It's this slow, quiet devaluation that makes something with a fixed supply, something you can't just print more of, look incredibly appealing. And that brings us to our fifth and final force, global divergence. The world economy isn't really a single team anymore. It's splintering. You're going to see some regions boom while others completely stagnate or even shrink. And when the world is that uneven, the ability to move your money, your capital, to a place where it's safe and can grow becomes absolutely critical. The source uses the perfect story to make this real. Michael Saylor's problem. Here's a guy with a company sitting on $500 million in cash. You'd think he'd be thrilled, right? Wrong. He looked at that pile of money and saw, in his words, a melting ice cube. He was literally watching his company's wealth evaporate in real time due to inflation. And that realization forced him to search for an escape hatch, a way to get that capital out of what he saw as a broken system. Okay, so we've walked through all 5 of these forces. We've got fragmentation, inflation, AI, stimulus, and divergence. Now let's put all the pieces together and see the big picture that the source is painting here. So just to recap the 5 forces real quick, we've got a world that's fragmenting, we've got sticky inflation that just won't die, we've got this massive AI infrastructure boom, we've got constant government stimulus, and we've got global economic divergence. Got it? And this right here is the core argument from the source. It's not that any one of these things is happening in a vacuum, it's that they are all happening at the same time, and together they are creating the exact environment, this chaotic, uncertain, inflationary world that a decentralized, scarce, and politically neutral asset was basically designed for. And that brings us right back to the very beginning. Remember that extreme fear in the market? Well, from this perspective, that fear isn't a sign that this whole idea is wrong. It's the opposite. It's a sign that the market is late to the party. It's a lagging indicator. It's focused on the day-to-day noise, reacting to the symptoms, while completely missing this giant structural shift happening right under its feet. So I'll leave you with this one final question to think about. As all of these fundamental pillars of our world, trade, energy, government spending, as they all continue to change and warp, doesn't our very definition of what good money even is have to change too?